Hi friends, myself Lizia Gupta. I'm talking on behalf of Patwari Academy, and today we are going to talk topic 7 of international trade finance, wherein we will talk about the way you can get the payments for your exports and the way you can pay for the import of goods in foreign currency. That's the best part of it, and including convertible INR. Okay. So as per the FEMA 1999, Reserve Bank of India allows that exporters can receive payment in any currency of their choice, including INR, that is convertible INR. And importers, they can also pay in any foreign currency, including convertible INR. And there is a special Vostro account which is going to happen for the sanctioned countries like Russia, which I will discuss in detail in separate chapter. So now let's talk about the most important is how the payment is used in the international trade. See, it basically depends upon the relation between the seller and the buyer, and depending upon the competition, uniqueness of the product, country conditions like political, economic, like Sri Lanka, Bangladesh, Pakistan, Afghanistan, cash flow considerations, and transaction cost. So basically, four payment terms are used. That is in advance payment or open account basis, documentary collection basis, and documentary credit. That is letter of credit. Okay, there is another BOP is there. Okay, so that we'll talk later part of it. So what happens? I'll just explain this how this payment mechanism work through this man. See, advance payment means if there is a seller in India and there is a buyer in Dubai. Now, if there is an agreement between the two parties, suppose as per the performance invoice or the purchase order given by the, so you want 50% advance, for example, and suppose the contract value is $100,000. So if the buyer agrees with this payment term, he will pay $50,000 in advance through his banks overseas, and the payment will come through the same Nostro account what we discussed before. So suppose this is Emirates Commercial Bank, they will pay to Citibank New York. Internet goes to JP Morgan, where you have the HDFC Bank as an account, and this $50,000 comes here, and then this bank will ask for your instruction whether you want the money to be converted, those 50,000 immediately, or you want this money to be kept in the EEFC account, that is called Exchange Earners Foreign Currency Account. So you can keep this money into EFC account also for it up to until the end of next month. That is, say for example, today is 22nd September. You can keep this money till 31st of October in the EFC current account, and you can use it for anything, import payment, travel, anything. Now, what is the another 50? Okay, 1,000 is yet to come. Okay, this is the advance you have got. But what is the most important thing? FEMA regulation says that if you get the advance, you have to export within 1 year from the date of advance. So today, if it is 22nd September, you have to export by 21st September 2023 within 1 year. If you cannot export, you have to refund the money and you can pay the interest. So for related, that is LIBOR related interest rate, you can pay and return the money. And post after 1 year, if you want to export or refund the money, you need a Reserve Bank of India permission. Please make a note of it. This is the FEMA requirement in India. Now coming to the remaining. Okay, so advance payment is generally, depending upon the business conditions, it happens. Then the second condition could be on a collection base. Collection means there can be two payment terms. Like for example, like here I can show you. Sorry, open account term first. Let me talk. Open account. In open account, what happens here? There is no guarantee of payment by the buyer, and there is a possibility of goods may be returned. So generally, this kind of open account means where there is no guarantee of payment, nothing, there is no commitment from the buyer. There's a possibility of less acceptance by the exporters for this kind of payment term. Even in China, which has got a bulk exporter, they don't prefer this, right? India, generally, exporters don't prefer this kind of payment term. What is most commonly used is the documentary collections and documentary credits. In documentary collections, what happens here? The documents are sent on collection basis, right? This is with the help of bank, they collect the money. So generally the banks, are presented through a correspondent bank of the bank, both the banks, both the seller and the buyer. So payments are generally on two bases. One is on a delivery against payment, that is called DP at site, or COD, cash on delivery, or also known as delivery against acceptances from the buyer, and which is also known as DA or usance, credit, term, or deferred. So they are all covered as a matter of, coverage internationally under the ICC Paris Uniform Rules for Collection, publication number 522, which defines the duties and responsibilities of the correspondent bank, seller, buyer, everything. So what happened in the case of DP? For example, same thing, which was agreed for $100,000, 50,000 in advance has come. Now another 50,000, you send it on collection basis. So what will happen? You export the goods, present the documents within 21 days from the date of shipment, and document goes and documents are presented. And if it is DP, deliver against payment or on site basis, document will be presented to the buyer and payment will be received against the document will be delivered against payment, right? So this is a delivery against payment basis, and the payment will come through the same nostro account. So what happened? Documents, payment should come in case of DP or site between 5 to 25 days. That period is called normal transit period of 5 to 25 days, depending upon the destination of the buyer. And this has been fixed, period has been fixed by FEDA, Foreign Exchange Dealers Association of India. Now, suppose if it is a DA basis, that is called deliver against acceptance, usance, credit, term, whatever. See, like domestic business, you can also allow a credit into the international trade. So suppose you say you want to give a credit of 90 days. No problem. 50% you have already got. Then after you export the goods, no problem. Documents will be delivered. You will be presenting to your bank. Documents will be delivered to the overseas bank. Overseas bank will deliver the document to the buyer against their acceptances to pay after 90 days from the date of shipment. On due date, they will pay. Inshallah, they will pay like this. And again, payment will come through the same mechanism. And you have the option to convert into rupees or keep it into EFC account there. If you have not taken any finance from the bank, which you will talk later, you have the option to convert immediately or keep it in the EFC account. Now see, the maximum DA you can allow, the credit, that is called credit you can allow to the buyer is 270 days from the date of shipment. So FEMA says that in any case, you must get the payment for your exports within 270 days. But if you're an importer in India, this payment time is given as 6 months time from the date of import. Now this is very risky. Advance, what is the risk involved? There is a possibility you may not be able to export within 1 year, right? So buyer is always doubtful. Number one. Number two, in case of DP, the risk is what? The buyer may not come forward to take up the documents in case there is a problem, change in the business conditions, like what happened in the COVID, like subprime crisis, Southeast Asian crisis. So there is a possibility he may not come forward to take up the documents. Whereas in the case of DA, he takes the documents but does not pay on the due date due to quality issues, this issue, that issue. There could be 100 reasons for him not to pay. So genuine also and non-genuine also. So how to cover this? See, buyer always doubts that whether he will export in time, and seller always doubt whether he will pay in time. So for that purpose, there is something called letter of credit comes into picture. So letter of credits, solve this mistrust. The exporter says, if I ship the goods, will you pay? Importer says, if I pay, will you ship the goods? That mistrust between this is solved by the letter of credit. So LC is a sort of guarantee. Kindly note it. LC is a sort of guarantee. So it will be issued based on your contract. If you say you want a letter of credit, exporter says, and if buyer is willing to give, they will approach his bank and they will issue the letter of credit favoring you. And then what it says is they will say that the issuing bank will say sort of guarantee given to the exporter saying that in case you comply with the terms and conditions of the LC, I'll pay. How would you, and present the compliant document. Huh? So how will you do it? You have to export the goods, present the documents, compliant document. You have to follow exactly what LC says. And the beauty of LC is what? It can be on site basis, it can be on DA basis. Site means they will pay immediately on presentation of document. DA means based on the DA agreed between you and the buyer, they will pay on the due date. That's it. So it is so beautiful. I tell you, these four parties are very essential to understand issuing bank, advising bank, nominated bank, confirming bank, and we'll talk in the next topic. We'll talk in detail about the working of the documentary credit. So I'm just reading a definition for you. LC is a sort of guarantee issued by a bank on behalf of the buyer, favoring the supplier, beneficiary, undertaking to pay and authorizing another bank, negotiating bank to pay on compliance with the terms and conditions of LC. LC is also known as a documentary credit because bank says we deal in documents, not in goods, number one. So LC should mention that this LC is subject to UCP latest version And previously, they used to always insist that they should write in detail that this is subject to uniform customs and practice for document credit publication number 600 2007 of ICC Paris guidelines. So this is a very important and beautiful, I'll tell you, the payment terms. So we'll continue. Keep watching. Thank you very much.